Hey everyone and welcome back to another video for today. So on Monday the markets are closed in the United States, in Europe and in Asia as well. Markets are open, and so Novo Nordisk on the Danish exchange, it's up 2.4%. It's also up 19% over the past month, but of course it's still down 42.5% year to date. Over the last 12 months it's down 60%. Over the last 3 years still down 5%, and over the past 5 years, it's up 78.5%. Now I'll switch back to the US ticker so it's a bit easier to look at market cap and everything else. So market cap for this company around $249.2 billion. Trading PE 14.4 times, forward 14.3 times. EV to sales 5.4 times, trailing forward price earnings to growth 1.7. If we look here at the growth rates, of course, this was a company that was growing much faster before, which is why, of course, we have seen the huge increase here in stock price. It's still expected to grow in the coming 2 years compounded, but of course, not as fast as before. Now, that said, this is still a company with very high margins. Gross profit margin, 84.3%, EBITDA, 51.1%, operating margin 47.7%, net 35.6%, and then free cash flow margin of 20.9%. So still very high quality business that also pays out a nice little dividend. Now, if we go and look at what has happened with those margins over the last 10 years, gross profit margin, free cash flow margin, you can see that over the past 10 years, gross profit margin has stayed, well, relatively flat, around 85%. Yes, it went sometimes a bit lower, went sometimes a little bit higher, but all in all has stayed flat for around 10 years or so. As for free cash flow margin, 10 years ago, we're at 30.6%, sometimes we're at 30, 31, 37, 34. Now it's already 2 years where we are at 25.4 and 20.9%. Why is that? Well, look at this increase in capex. Huge increase in capex over the past 3 years, not just the past 2 years, but the past 3 years, maybe even 4 years. Huge increase in capex, which does, of course, impact free cash flow margin. Now, what about operating margin? Well, same thing here. Operating margin over the past 10 years. For a while, that stayed relatively in the same range, but then look at this. Look at what happened over the last 2 years or so. Went from 42.7% to then 45.1%, 48.2%, and now 47.6%. Pretty good. Moving on here, looking at the stock price, which is the blue line, and then net income. Right, I've shown you this a lot of times where usually the stock price does follow net income, and then sometimes, well, when there is a huge disconnect, that's usually maybe a good time to start looking at, first of all, why that has happened, and then when you understand why that happened, does it make any sense? Usually you can find quite a lot of opportunities here. So now I'm showing you the last 15 years. And as you can see, over the last 15 years, net income went up, stock price went up. There were some certain drops here and there, but all in all, the trend here is quite clear. And then we see here an acceleration, of course, in growth, and also an acceleration of, well, the stock going up and up and up and up until it reaches a peak right here back in 2024. Since then, as you've seen, stock got completely crushed, right? Since the top, down over 60% or so. But what has happened with net income? Did that drop by 60%? No, it did not. Now, of course, we know, okay, net income can continue to go up, but it's also maybe not going up as fast as before. Maybe, as we've seen, right, free cash flow margin did come down because there is an increase in capex. There's also just a general slowdown in overall growth. There's more competition from Eli Lilly, from compounders, and those are the various reasons why, well, CEO being replaced as well, various reasons why the stock goes down. But down 60% plus is quite a huge hit, especially when we are not seeing a hit on net income just yet. And so let's talk a little bit more about Novo Nordisk. There is also some recent news that came out, company-specific news as well, that I do want to cover in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also a special thanks to Fiscal.ai, which is this platform right here that I've been showing you time and time again, for sponsoring this video. So if we actually, let's shorten it again to 10 years here, just so it's zoomed in a little bit. What we're seeing right now is, of course, one, stock previously maybe should not have been so high, right? This can definitely happen. Two, there are very good reasons why the stock pulled back, right? Also, some of the results were maybe a bit weaker than expected from some of their products and solutions. Product and solution, I'm talking here as if they're selling PCs and phones, but you know what I mean, right? The obesity drugs and all of that. Some results were not as good as what the market was expecting. And so, yes, we started to go down quite aggressively towards the end of 2024. And then the struggle just continues, more competition, CEO change, etc., etc., and guidance as well. Guidance has changed as well. And then we got completely crushed, right? Stock was trading at around, I think, $45 or so, right after they reported their latest quarterly figures. And since then, the stock did rebound. We're now at $56. Why? Well, because in my eyes, it was just too cheap to ignore. But then again, we have been saying this for quite a while. But the big difference here is that the previous statements that we've made, right, it's too cheap to ignore, was based on the previous guidance, right? The previous guidance was still quite good. The new guidance means that this is a company that's expected to grow much slower than previously expected. So yes, overnight, this became technically a more expensive company just because the guidance was reduced, right? Because one day you're expecting this company to grow, what was it? 16, 17% or so. And then the other day, the company expects to only grow 11, 12%. It's quite a big difference. But still, then this was an opportunity for those that did want exposure to Novo Nordisk. Actually, same thing was said about Eli Lilly when it also dropped not so long ago. Now, just yesterday, we've got this news right here. Novo Nordisk Wegovy cuts risk of heart attack, stroke, or death by 57% compared to tirzepatide in a real-world study of people with obesity and cardiovascular disease, or CVD, which of course is excellent news, right? Every time you see things like that, excellent news. Now, the thing here is with this report, I'm not going to read through all of it. The thing here is that I found the numbers a bit weak-ish, especially right here, right? So Wegovy showed a significant 57% greater risk reduction for heart attack, stroke, and CVD-related death or death from any cause in people with overweight or obesity and CVD who did not have any gaps in their treatments lasting more than 30 days. There were 15, that's 0.1%, of these cardiovascular events recorded with Wegovy, and 39 events, 0.4%, were recorded with tirzepatide. The average follow-up duration was 3.8 months for the Wegovy group and 4.3 months for the tirzepatide group. And I mean, you can understand, right, why I'm saying this is quite weak, because the numbers here aren't really that big, right? The numbers aren't big at all, actually. So I found it quite strange to have a press release just for this, although, like I said, this is great to hear, but maybe grow the number. I believe this is what statisticians called a low-rate event. Moving on to the previous announcement, which was a couple of weeks ago, Novo Nordisk Wegovy approved in the United States for the treatment of MASH. If we go down and look at the comments here, Wegovy is now uniquely positioned as the first and only GLP-1 treatment approved for MASH, complementing the already proven weight loss, cardiovascular benefits, and extensive body of evidence linked to semaglutide. MASH represents a significant health burden, with 1 in 3 people with overweight or obesity worldwide affected. In the United States alone, around 22 million people are estimated to live with MASH. With the approval of Wegovy for MASH, we provide a new treatment to people living with MASH that not only halts the disease activity but helps reverse the damage caused to the liver. I believe this announcement had way more of an impact on the stock than the one that we've just read, even though today it's up 2.4% in Europe. Again, I also think that's just because maybe sentiment around the stock and around the company might have been at, well, all-time lows, and now every single little bit of news that comes out is a good one, which makes sense, which is probably also why they did release that press release. Now, before concluding this video, I just want to show you what the analysts are expecting the company to do in the coming fiscal years revenue-wise. So fiscal 25 still expected to grow 19.5% year over year, fiscal 26 18.1%, and then fiscal 27 a drop here of 7.7%. As for net income, that's expected to grow 9.5% in fiscal 25, then 4.9% in fiscal 26, and then accelerate to 12.6% year-over-year growth in fiscal 2027. Then lastly here, free cash flow. As you can see, free cash flow peaked here December 2023. Since then, it has been coming down. It's expected to be down year on year, 36.3% in fiscal 26, then go up by 81% in fiscal 25, then go up by 81% in fiscal 26, and another 24.6% year-over-year growth in fiscal 2027. By the way, these are Danish kronen. This is in dollars. And so right now, this is basically it. We have, in my opinion, seen the bottom, and we can maybe call it a double bottom, right? The previous one was back here September 2022. Stock was also at $45, $46 or so. This time, early August, stock was at around those prices as well. And since then, the stock has been making its way back up, now also above the 20-day moving average, still down 61.8, so 62% since its all-time highs that it reached back in June 2024. RSI is still quite low here. Is it a dead company? No, I don't think it was a dead company here, here, or even here. It was a company that previously did grow extremely quickly, right? Thanks to the rise of GLP-1 and all of that, rose very, very rapidly, and then started to get hit time and time again with negative catalysts, right? Usually catalysts provide some movement in the stock on the upside. In this case, that did not happen. And so we can see here sharp drop here as well. Now, I do think that investors are definitely looking for value plays in maybe what people call an overstretched market. And so that's why I do think that we're going to see a nice move on the way up. We're not going to go back to $170 anytime soon, but you might be getting market-beating returns if you did buy under $50. Quickly looking at Eli Lilly as well did drop sharply. Last time they did report, I said it didn't really make that much sense. It might actually be an opportunity for those that really want to buy Eli Lilly. And since then, well, the stock did almost recover all of the losses of that earnings release. So overall, I still believe these two companies are very, very good companies that will continue to grow. The total addressable market is immense for both of them. But yes, these are companies that are definitely sensible to bad press releases, maybe even some policy changes as well. So make sure you understand all of it. Do share your thoughts down in the comment section below. Check out fiscal.ai. Link is down in the description and in the pinned comment. You can get 15% off if you use my link, and new users can get 2 weeks for free. So you can try it out. Thank you very much for watching. We'll see each other in the next one. Bye-bye.